Hello, everybody, and welcome to the Plus3 Futures and Commodities Show. It is Saturday afternoon, the 26th of March, and we are recording. My name is Ben Maldonado, and as always, I'm here with my partner, Barrie Hederachi. How are you, Barrie?
Hi, Ben. Hi, everybody. I'm good. Just ready to go.
Yeah, an interesting week. Lots of strength in risk, lots of weakness in bonds. Somebody's wrong there, and I guess we're going to find out soon enough who is. But let's first start off with Bitcoin. Bitcoin has been pushing for the week, has been pushing higher. As you can see from the chart, we're up at the sort of top rail of this contracting triangle, and importantly, we're above this support resistance, square in the 42.3 area. So as long as we're above that square, Barrie, I have to say I'm bullish on Bitcoin, and it looks like it's going to break out, break out of this triangle to the upside. The other thing that I was noticing that you and I were chatting about before we started is that, I'm running these calendar day cycles here, and here we've got the 69 calendar cycle that started at the low and ends first week of April 3rd. We could be pushing into that and or this half square here, from a timing standpoint, and push up into that and potentially make a high. I mean, the key thing is as long as prices are above this 42.3 area, it's looking like risk on, and people are willing to take risk on the sort of the highest beta asset out there, and that's Bitcoin. What do you see when you look at this Bitcoin chart?
Well, yes, I think holding above the square is key here, and any pullbacks holding above that, I think that's the time to take a look at it. But I'm also noticing the the November, late November, December lows. See that?
Mm-hmm.
And that's really where we're holding. If you take that in right there, yeah,
mm-hmm.
We're holding under that, so we could be poking into that, testing that area. We'll see how it goes, but I think any pullbacks holding above that, the full square, is probably the low risk place to take a shot. If you're leaning towards that, that would be the best spot.
Yeah, and if we're looking at, I don't think, I'm not saying this is they're going to all-time highs or anything, or 100,000 like a lot of these crazies out there, but this, just a simple ABC takes us up in this area, 49, 48,000, which would be right in the middle of that, that whole cluster you were just talking about, the November, December area.
Right. So, but I think the half square above is probably fair target, looking at the past price action. So, I wouldn't, I think that's reasonable to expect it to get there.
Mm-hmm. And that's like 51.2, 51.3.
Right.
By the way, all the levels, the ones that Barrie talks about, the ones that I talk about, they're on a spreadsheet, a Google Doc that we share the link to when we post the link for the video. So if you can't write them down, or you're not in a position where you can remember them, we have them all updated on a spreadsheet that we'll share the link with you. Mm-hmm. So to me, this is the proxy for risk. It means if Bitcoin is bullish, it's risk on. So probably the squeezes, I don't know what you're going to say about the equity indexes, but the squeezes looks like they're going to continue this coming week if this is, if this plays out, as it's showing now. So let me throw it over to you. Let's do the big five and see what your story is for this week.
All right, let's do that.
We spent a lot of time in that box you had drawn, didn't we?
Yeah, better part of the week, I'd say.
Mm-hmm. Mm-hmm.
And well, just to catch up, you guys, if this is the first time you're watching or seeing our show, go back to the last couple, at least two or three. That way you'll catch up on the story, and because we kind of use the same charts every week, and we keep them updated and the story going. And if you like our stuff, take a minute to subscribe and share.
Hit the bell.
And yes, hit the alerts and also also the like button. That's a big deal these days. So, all right, and for those of you doing that, we appreciate it. Thanks. Let's take a look at the e-mini here. Last week we left it off with we week before that we were looking at 42.75 to be the key pivot. Once we get above that, we were expecting the market to be strong. And last week we were looking for major resistance between 44.80 and 44.90. That was sort of the zone here, the two lines you can see. And the box was the sort of the major resistance zone, with it being very narrowly defined between 44.90 and 44.80. And, for a good part of the week, we were basically banging up against that, selling off, and then rallying at night, selling off during the day, all kinds of shenanigans. So we spent 3-4 days in there. And then Friday, we were able to basically, the low came in. Friday lows came in to test that 44.90 area, and they were able to hold it. You can see that last bar. That's what we talk about, breaking out and being able to hold above it. And it was held right above the 44.90, and it moved higher. So the Friday low was 93. So it was right there, and it looked good. Before and tied to that, I've been showing you guys this. I've been showing you guys this 4-hour chart that I post on Twitter, just to keep up with the day-to-day price action. And we've been following this chart since the low came in, and it's really helped us sort of stay on the right side, and also to catch the corners. And we left it off in here last week, and we drew up this box on the basis 4 hour. It's 44.40 to 44.60, saying that if we can hold above that, the market's in a stronger position. It's probably going to move higher. So what happened was, early part of the week, we kind of got stuck in there, broke out, and came back to retest it. And we picked up speed and went on to new highs for the leg going on to Friday. And I'm showing you this just to point out, like, this is what we call when we say, break out, come back to retest the level. So here's a classic. We marked this off last week or the week before, I think, and you can see how it struggled there, broke out, came back to retest, and even this, one to the third bar, you can see it was a big white bar. It also came back to retest again, that 44.60 area before taking off. And then we started doing this big wide, the triangle, expanding triangle up here. Anyway, we post this every couple of days on Twitter, so you can keep up with where the price action's sitting. And using all of that, here we are. We're at new levels, and where do we go next? I think a couple of things to look at. One thing that's sort of been creeping up is this 90 degrees from the high. So there's a potential we do, Monday, Tuesday, Wednesday, we do 90 high to high. And that's a
big deal.
Yeah, it's a big deal. It's a big deal, especially right now. And it's not just the 90 high to high that's coming up. Another thing we have to keep an eye on is, it's always good to know what we're doing low to high. And we're doing about 30 degrees low to high, going right into that time frame. And you can see that right there. Looking a little closer. Now, when this happens, I try to look at all the counts. If I have one, I try to look at the other ones and see where we might be. And we also have a 45 high to high from this counter trend, the first counter trend high that we had. So we have a 90, a 45, and then a 30 low to high. And
that's the geometry trifecta.
It's pretty good. It's pretty good. Especially, I like this count, having a count up here, 90 and a 45, and they're both coming from high to highs. So that's something to watch. And the reason I wanted to talk about that, we also have levels up here that are, fairly close to the let's just say not too far away.
Mhm.
So the couple of levels I'm watching early part of the week would be 45.60 is a key level to watch. And the level above that would be 46.30. So we have two levels, 45.60, 46.30. If we get through this right away, Monday, Tuesday, then for sure we're probably going to go and tap at least the 46.25, 46.30 level. And I just can't see it going much higher than that. These two are very strong resistant levels, especially 46.30. So either one could take it. And for next week, let me get rid of some of these lines.
Barry, given what we're seeing in Bitcoin and the sort of animal spirits of risk coming back, that's a pretty good shot they're going to push it that far, huh?
Well, I wouldn't bet against it at this point. Especially, well, the marker is if we take out this 45.60, then I would say probability of 46.30 is it's sort of very high. Okay, so that's how I'm looking at it. I'm sort of escalating that depending on how we handle 45.60. If we kind of get in here and reverse immediately and it looks to get weak, then I would say that's probably going to hold for the week. So those are the two above us. And below, I think around 44.50 is what we want to look for support. And if 44.50 goes for some reason, then I think we have this 90 to 90, 45 high to high, all of that, 90 high to high and 45 high to high is probably locked it in. And we can look for lower prices, especially 45.50 gets taken out first 2-3 days, and then this old 42.75 becomes the target. That's still a key level, so I'll leave it there. So for next week, just really support at 44.50, resistance 45.60, and the 45.60 gets taken out. You guys know the next level is 46.30. So we have some time, and also a couple of price levels, and they seem to be coming together. So we'll be watching that. Looking at our weekly chart, so it certainly looks like that box gave us a hint as to where the low could have been expected price wise, and it did come in right in that zone, and now we're moving higher. Taking the weekly into account, if you take the same geometry, we went more than 50% roughly on the box. So if we're going to stop, this is probably the area to sort of turn around. So we'll be watching weekly. It's okay. Like, we had a couple of strong weeks, which means, we might be ready for consolidation or some kind of a counter trend. So keep that in mind. Okay, that's it. You want to add anything to the S&P? I know just you covered the NASDAQ. So
yeah, just that the interesting thing with your timing is I also have through my cycle work, early April, a bunch of hits coming too. So it's all converging right there right now.
Yeah. So 96 is good for, until about 90 is good till about 96 because that's a harmonic of 72 or a square of 144. So it's all in there. It's in that zone. So we'll see. Next, we'll take a look at bonds. And
bonds have been very good to us the last couple of weeks.
Bonds, yeah, finally paid off for all the work we put in every week. All right. One thing about bonds, I was telling Ben Friday, we did come up and finish this 180 degrees, which, I was pegging it about, I figured it'll go push all the way to 146. And, we got close, but we definitely came down 180 degrees. So that's something to note, meaning, it's definitely a level to watch because the next 90 is, far away. So, and these things don't hit every day. And when they do, you really want to note it. And you can see what happened the first time we came during the COVID panic. And then the second time we came back and touched 90, there's always a little bit of a bounce. And you can see here, the 90 had a little bit of a inflection before we turned down from it. So it definitely plays, that vibration is definitely in play. And so from the high, we had the 90 come in but from the
swing there.
swing high from last year's high, we didn't quite get there. So that is around 144 and a half.
Mhm.
And, I'm getting into all of that to say that we might be done with this and we might have a little bit of a counter trend or some consolidation coming up, mainly because of the fact that we did go 180 from the high, and those things really do come into play. And this 149 I got from the square of 72, which also is fairly powerful on bonds.
Mhm.
And the deal there is, we didn't quite hold there. We kind of broke below that. So just like how we watch, the S&P using these sort of key balance levels, I would say 149.02 is a level to watch to see if we get above it and kind of hold above that. And if we do that, then I would say this leg completed, and we'll have to wait for the next counter trend and deal with it at that point. And so 149 is 02, 149 is sort of the level to watch for resistance. And if we get above that, next level will be 153.19, somewhere in that ballpark, just like it stopped here. So that's it for bonds. The potential that we have a low in, and the way we would know that would be to watch the 149. And if it holds, we can probably go down to 146 or a little bit more, not much. We're kind of stretched out on bonds. So, I mean, the last year's from the swing high, 144.5 would be sort of completion. So keep that in mind too, because we have that doing 180 bars end of the month. So it's possible we do 90 by 180 and we're square out here. So no matter how it goes down, we're pretty close. We're close to some kind of a counter trend. So watch your positions there. That's the point. So looking at weekly, again, it's the picture is still very bearish, and the weekly support comes in around 141.05. Let's say
Funny because I have some targets at like 142.5, and then the 137 to 138 area, longer term stuff.
So this is definitely longer term, not for next week. But it's good to know. Well, one good thing to know is what we did last week was we took out the 72,
and got stuck below it.
Yeah. So last week's high was exactly on the 72. And you can see the counter trend high over here came up to, that was 50% line, 36 degrees. So clearly this is weak. And I think this 150, again, that's the level to watch to see if we can kind of hold that or stay under that, being that it's 72 degrees on a weekly basis. And 141 would be the final 90-degree move down from the high. So that's kind of the bigger picture. Moving on to crude.
Crude just keeps acting bullish, doesn't it?
Definitely. And boy, if you guys watch our crude talk for the last, I don't know, even the year, we've been bullish the entire time. And we had some key levels we were watching for it to hold over, especially, going with Ben's these big inflation cycles and all that longer term work. We were looking at this 97 area to be a key level to hold, 91, 97. And last week we talked about this zone should be held on any kind of a pullback. And we didn't even get there, right? It just broke out and that was it. So this 102.97 is still key, I think, to watch for next week. And long as we're above 102, I think this 135 from a month ago is still in play. So
no question.
Yeah. So I'd keep that in mind. And 102 being this zone really is the support. So long as we're above this 97, 102 zone, it is bullish and you can probably take long side trades without a whole lot of problems. And so the reason we like that 97 is because that's 90 degrees up from all-time lows, is it? Yeah, pretty close to, yeah.
That's the low.
$6 crude. Oh my God. All right. So anyway, we're up 90 degrees and that 90 is right around 97 in price. And you can see the week before we ran down into it, held above, and last week we held well above it. So that's why we're saying, long as we're above this 90 degrees or that 97 in price, crude is bullish, and you can probably play that side. And the
It's interesting. So far, they can only do a 1 week counter trend.
Yes. Yeah. 1 bar counter trend. And let's see. I don't think it quite went to blow off. So although it looked like it, so I think there's more to go. I would definitely watch it closely and watch those levels and use your systems and methods to trade in that direction, right? Here's gold.
Similar chart to crude, isn't it?
Very similar and similar.
Recent action anyway, the recent action.
Right here. And also similar to gold, similar to crude, the support zone held up fairly well. And we're going to continue to watch that. And we can probably even tighten this down a little bit into, so long as gold's above 915 to 940, that's sort of the buffer. It's definitely has a lot of pressure to the upside. It's not acting like this finished something. It's not doing that in my
Agreed.
So, and the fact that we held above 915, 940 is strong evidence towards that.
Yeah, it's not acting like something's done. It's just acting like it's consolidating.
Yeah, and it's not it's not some kind of a bull market on fire, but it's certainly not a bear market.
No,
so
it's not screaming out of the highs.
Right, and long as we're above this 1887, 1915, this zone, it can run at any on a very short notice.
Agreed.
Keep that in mind. Those are the levels. Upside don't really have any levels. I think 2000, 2100 would be reasonable on a run up. So we'll take it as it comes. Looking at the weekly gold, again, 2100 would be a decent target on if from here, at least to a minimum. And I think if we get up there second time, we're probably going to go way past that. But let's use that for now. And we've been, all of last year, we've been talking about how this is making higher lows and getting squeezed, and we should get a decent, break out of that, which we did. And even basis weekly, we're holding this 1881, 1919 zone that we drew out. So it's positive, it's firm, and I think odds are to the long side.
Agreed.
Let's take a look at the dollar.
Isn't the dollar supposed to be at 0 by now? Everybody and their mother keeps talking about the dollar's going to 0. It's going to lose its reserve status. Just sell dollars. And all it does is act bullish.
And I've been hearing that in cycles for as far as I can remember, 30, 40 years, I think at least.
But now because the Fed flooded the market with so much liquidity. Oh, all those dollars, it's going to crash the dollar. It's going to crash the dollar. Look at that chart. That's not a crashing chart.
No.
Crashing up mainly.
For now, anyway. It's definitely not crashing down. But anyway, we've been bullish the dollar. That's all I know.
Right.
And it's been, it's a very beautiful trend, good market. It's good trading. And now, last month or so, we got into this funky sort of the tightening triangle contraction. And this is going to lead to some kind of a break, either to the upside or the downside. So far, it looks like it's. I think we called out a little bit higher numbers, so 101, 102, I think. So we'll wait for that.
Barrie, just like a lot of when we do the monthlies, which we'll do probably next week or the week after on the new month, the triangle is occurring over that entire level of consolidation. The November to February,
over here.
And that's bullish, right? It's consolidating over previous highs.
Yeah, this is the basic price action. These markets have been really good to trade, really easy to read because they're sort of trading textbook. We're not stuck in, hard to figure out situations. So here, as far as I'm concerned, they're all moving very nicely, and it's easy to figure these out. And those times are rare, so that's why it's good to, make hay while you can, while the sun shines, right?
Yep.
So here we're looking at 72 degrees up from 2021 lows. And the reason I put that up is, look how we're holding above that 72 square.
Perfectly. Yep.
And that's why I'm saying, it's bullish. We can go higher. So the key level to watch there is to see if we can hold above that. And that's really, maybe let's say call it out 98. So long as we're above that, we're I think dollar's in good shape. And if we take out 99, then there's still a couple more points we can go without any trouble. So if we take the 90, that comes up to about 101, let's say. So that's the upside. Not a whole lot left here till we get into some kind of a correction, at least for this leg. But we've been going for a couple of years, so or a year at least, more than a year. So it's been a good run, and we're getting towards the very close to the target. So keep that in mind. Not a target, I would say. Major resistance. And looking at the weekly dollar, again, we're above the 72. That was a key thing with this, this 98 area. As long as we're holding above that, it's strong. And we did hit this trend line coming off the older highs and backed off, and this is where we're consolidating. The fact that we're doing a sort of a triangle versus just turning down, that's bullish in itself. And the fact that we're doing it above a 72-degree line, above the into the new square, it keeps it bullish till we sort of start breaking through 98. So I think there's definitely upside. And so 101 would be this angle coming off of the last high from 2020. So that's up here.
I mean, it's doing a great job of consolidating and capturing that higher square, making a base right there.
That entire week was above that. You can see that very clearly.
And that's really bullish.
You see, maybe I can make the bars a little fatter.
Yeah, after crisscrossing for 3 weeks or 2-3 weeks, that entire bar was above it.
Yeah, right there.
Yeah, I think the dollar's bullish still.
Yep. And the euro's weak still.
Yes.
Well, here we sort of like the bonds doing the 180, right? We did 144 down. We kind of tagged it. Really no big run following that, even to challenge the old resistance up here around 120. So I'm figuring this is probably going to consolidate in here for the next week, and but on a weaker ground.
Got timing coming in there too, the full square timing.
Yeah, there's some timing coming in, but I mean the price action is just pathetic. So
no question.
So we might consolidate for a little bit longer. We'll have to see. But I don't have a whole lot of interest in this right now. There are better places to fish.
No question.
But it's good to cover this just so we're on top of this. And part of that might be because, we just can't even get up to retest these old resistance levels. So, I feel like it's not done. It was a very narrow week in the euro, and narrow weeks don't last that long. So watch last week's high and low, break to the upside, could end up testing our resistance up above, which, like 120, 123. And if we take out the low, we could definitely go and check new lows for the leg. Yeah, I think that's all I got.
Excellent. Great review.
Sweet. All right, let me put it out to you and take a look at the commodities that are ready to move or moving already.
Yeah, let's start with NQ.
Doesn't look like a bear market rally at all.
What are you talking about? There's no pullbacks, Barry. That's normal for a market, right? It's just straight up.
Straight up. And bonds are straight down.
Yeah. So anything but normal. But anyway, let's look at where we are and let's look at where we might be going. So we had a false break at the low, made a nice strong move up, 3 or 4 bars up. We settle on top of the full square here. See that's really powerful when the low of the bar, stays on top or stays below a square. It gives you a clue as to where the next move's going to be. So recently we captured the half square, with Friday's action, and look where the low of the bar is, on the half square.
Yep.
So my guess is that odds favor we're going to push up even more and potentially get to that, 15.2 area that we talked about, 2 weeks ago on the show. I drew in some some speed lines or GAN lines, whatever you want to call them. This is a 1x2 and a 1x8. The 1x8 caught the first pullback off the high, the all-time high. The 1x2 here may be the thing that's going to catch this counter trend, right? If we do make it up to this full square and we do it in early April, where we have some timing, right? We've got that the half square timing here, around April 1. I've got some cycle hits in early April as well. Barrie showed you the 90, the 45, and the 30 coming in that same time frame. So it's quite possible that we're going to keep pushing, keep squeezing, and come up and tag this, which if it does and turns down, will still be bearish, right? Because it basically is going to be stuck under this whole section here that we did for months last year and early this year. So I do think the odds favor continued push this week, continued squeeze. Do we make it all the way up here? Maybe, maybe not. But this sort of price action, what's really important, and Barrie and I were talking about this, is what happens on the first pullback. I mean, we have not had a pullback. There's been one inside bar out of 9 days. It's just straight up. So first pullback is going to tell us a lot. If we can stay on top of this, very bullish. We get stuck under that, suspect. We can't hold this, forget it. It's going to go. I mean, those are the assessments that we'll make based on the price action, when we see it. But right now, it's really hard to assess. And then, I see people saying, "Oh, it's a new bull market. It's just like in March of 2020. You got to go in and buy." It depends on your time frame, right, and your risk tolerance. This is a squeeze. It's painful if you're short, and I am short. Both NQs and ES, and it's painful when it happens. But you manage your risk. You make sure you can hold through it, or you step aside and wait for another time to take a shot. I don't know how you feel about the NQs, Barrie, but I know during the week you were like very suspect about sort of the lack of pullbacks in this market.
Yeah, well, you have to wait till the right time shows up, and it hasn't. Thursday, Friday, it looked really like there was some kind of a battle going on, but it's not quite ready. I think that 90 high to high might do the trick Monday, Tuesday, so we'll have to watch that, and also watching the levels. And I want to see the market tipping the hand first, right? So we watch the 4-hour charts and whatnot to help us figure that out when it comes to these key zones. So I'll be watching that next week.
Very good. All right, let's jump to the next market. Here's one of my favorite charts for the last few years because it's really helped us capture some fast moves. This is a weekly on bonds. Last week, we talked about how we were right here up against the arc, that we either had to, break out of the arc and either go sideways like this or rally, or we were going to have to do a fast move down. Well, you can see what it opted for. We got the fast move down. We're in a very similar spot. The next week's bar is going to start right here, which is right on the arc. Either it stabilizes or rallies and pushes out, and then it's sort of the fast move is over, or it's going to push down again. So we're watching this Sunday night at the open, Monday, to see, if we get any clues as to how that's going to happen. Barrie covered bonds very well, but I want to just add to something that I picked up in my review this weekend. So there's an interesting sort of cycle that I picked up in the chart review this week on looking at bonds, and I wanted to share it with you because it fits with sort of the timing and the hits that Barrie had from a 180 and 90 standpoint on the bonds. If you look at March of 2020, we made a low and then rallied into a July, August sort of counter trend high in this overall structure of a downtrend. That was in 2020. Then we flipped to 2021. We make a March low, counter trend rally back up into a July, August high. And what are we doing today in 2022? We're making a March low, and we're trying to figure out whether this is the low or is there more to this leg. Given the cycles we saw there, we are on alert because of the number of degrees we've gone down, as Barrie pointed out, the timing, into different cycles that we're looking at in, late March, early April, and this sort of last 2 years pattern that we've picked up in bonds. So it's conceivable we could make a low somewhere in here. Maybe it pushes a little more and we get down to this half square, around 146 area.
Mm-hmm.
Or we could just turn here, chop, go sideways, rally back up into this, July, August timeframe again, and set up the next potential good trade to the downside. Overall, as you could see from the weekly, the trend is down. It's bearish. The monthlies, which we'll review on the monthly show in the next week or so, you'll see again that the major trend is down. It's just that this pattern that we've picked up in the daily, in addition to being, hitting 180 down from the major high in 2020, has us on alert that, the train may be stopping at the station here for a little while on bonds. So it's something to pay attention to. Let's go to the next one. Barrie talked about gold. I think gold is, based on the work that I'm doing, it looks to be ready to make the next run higher in the near term. We detailed this sort of long consolidation and the series of higher lows. What we're seeing now that we really like to see, and you'll see it on another market that we've been talking about as well in a few minutes, it's also this steepening of the trend line. You get your initial trend line, you get a second steeper trend line, and then you get the third the steepest trend line, which catches the fast move. And I think we're getting there in gold. It's setting up, it's finding support, it's making higher lows, as you can see here, coming off this sort of spike high into the half square. On the daily, the key level, which will open up the higher square, is this 1972, 1973 area. So as long as we can get above on a daily basis 1972, and do like, one of these bars like this where the low is, on top of the square here, then you'll know you got the all clear that we should be moving higher. I know you talked about gold, Barrie. Do you got anything else to add based on this chart?
No, nothing to add. I think you covered it well, and I think that full square is definitely something to watch, especially if we break above that and start building above it, right?
Absolutely.
So
that will be the all clear signal. Here it's a little early, but I'd like to give you guys a heads up for what I think are markets that are getting ready to give us a fast move. Gold's little brother is silver. Very similar pattern. We're starting to see this curl up in the pattern where it's getting steeper. The angle of ascent is getting steeper. Unlike gold, though, it's already sitting on top of a full square. The bar on Friday, the low, sat right on top of that square. It looks to me as if silver's, ready to make that fast move higher. Same pattern, big base, 18 months sideways, series of higher lows, higher highs now. We had that push and pull, strong pullback. We had a low here, had a higher low here, and now we have a bar that's sitting on top of the full square. So silver to me looks like it's ready to challenge these highs in the full square area, which is, around 29, 30 bucks.
right.
It looks good. What are your thoughts on silver?
Same. I think long term it's pointing up,
Mm-hmm.
and just being patient and waiting to take your shots at good places. And this looks like a good place.
It's a good spot.
It's a good spot. Yep.
Yep. All right, let's jump to another one. This is also one you covered, crude oil. A few weeks ago, willing to say, oh my God, I think we topped on crude. But I have changed my tune. Based on the price action coming off that high, this really looks bullish. Barry identified, some important levels that he's working with. The reason I like the crude here is, again, we're getting that, ascending trend line sort of scenario. You could even draw this one in now because this low came in, but this thing looks like it's on the launch pad, ready to go. This trend line is operative. The trigger for me is going to be if we can break the trend line, which is, falling in the same area as this half square, which is around this 115, 116 area. To me, that's going to be your all clear for a trade. Once we clear this half square, then the full square comes in, which is in the 127, 128 area. You clear that, you're into the 140, 150 area next. So crude looks good. The pullback held support perfectly on a half square, and this, this consolidation structure that it had in February on the way up. As long as we hold this this full square, I'm going to call it right here in like 103, 104, probably take it down an eighth, so more like 100, 101 area. As long as we hold there and can make another high on any pullback, I mean, this thing looks ready.
Yeah, it's pumped up.
Yep. It's just waiting for it's like Tinder waiting for the match, it feels like to me. So that's crude. Here's one we talked about last week, and boy, did it turn out nicely. This is nat gas. Major move last year, which we were on. Never grab enough of the big moves, but glad to be in it. Happy we made money there. Huge correction and consolidation here. Big triangle formed. And notice this. This is what we picked up on last week. We had this trend line, and then this trend line coming in to start last week. Remember, last week we were talking about it. It was right in here.
Sitting on top of that, half square.
Sitting on top of the half square, and that gave us the launch. And then look at this little bar here. Let me see if I can stretch it out so you can see it a little better. See how that pullback off that bar?
Yep.
Couldn't get below the full square.
Mm-hmm.
And then the next bar obviously is up and out. So nat gas looks very good. If we have any kind of pullbacks or consolidations that can hold this, 509, 510 area, I think it's a great buy. This really looks like it wants to go up. You can see there were a few spikes in this area, so stalling here is not surprising. We did close above these, which is bullish. For the week, we closed above there. Wouldn't be surprised if we had any kind of pullback, but looking at 5.9, 5.10 area, if that holds, it should give us the courage and the strength to see this thing attack, these highs we saw in September, October, around 630 area. So gas still looks good. Obviously not as good as last week when we talked about it, but it's worth watching. The downtrend line's been broken. We just want to see what pullbacks do, if we get any that give us an opportunity to enter. I know we were talking about nat gas during the week, Barry, and you were loving it. What are you seeing in the chart differently, or any other insight?
No, I'm with it, man. I think it's trending, and let's stay with it.
Exactly.
Right.
Yep.
Yeah.
One more to cover. It's another one we talked about last week, and there's the definition of a steep trend line. But that's how these things move when they go. Last week we talked about copper. Here was the close, around 126 3/4 in that area.
Mm-hmm.
And then you get these big, powerful moves when the setup's right. And this is what we saw in cotton this past week. I'm showing cotton. Obviously the risk reward is not the same up here as it was down here. Just to show you the targets, 141 area, I think, is the first target. We closed over the half square, which is in the 135 area. So I think minimally we're going to challenge here. We'll watch to see if, how we hold. If we can get above and stay on top of this, then the half square comes into play, which is around 146. The measured moves, similar to these other moves, does target this, 145, 146 area in cotton.
Mhm.
So the key thing here, and why I wanted to show it was, not to say, haha, look at what we did, but more like, see the three trend lines? You got this one, which is relatively flat, this one, which is steeper, and then you get this kind of move. Doesn't happen every time, but that's kind of the pattern and the setup that you look for, is you want to see the series of higher lows and higher highs and faster moves on each consecutive move. And that's kind of the view of cotton. As far as the other commodities go, the grains, they're all continuing to be in their corrections. So I'm not going to highlight them with charts because, we're trying to pick and find things that are ready to move. So they have some more consolidating, correcting. A lot of it's been burning off time. They really haven't been eroding in price very much, which longer term is very bullish. Copper is still stuck in major triangles, weekly and monthly triangles. It's trying, it keeps going up and pulling back and giving you higher lows. Just waiting to see a little more clarity there before getting involved with copper. Sugar's the same thing. It's pushing, but it's right in the middle of a consolidation zone. If we see some more strength this week, I'm sure that's one we'll be talking about next week as the chart shapes up. Cocoa is monthly, weekly triangle, and daily as well. It's in the triangle now, so that's triangle hell. We're staying away from that. And coffee is still trying to get its footing. It's possible we've seen a low in coffee, and as that chart shapes up this week, we can potentially update people on Twitter or on next week's show. So a lot of the commodities are correcting, fewer correcting now than were before. You're starting to see, we're talking about more markets now. We got 1, 2, 3, 4, 5 this week as opposed to 2 last week. So they move in and out of these phases, and as they do, we'll try to identify them. It's a big week in the market with early April having some cycles, and this squeeze in the equity markets continuing, I think. So those are the things I'm going to be watching. The charts that I highlighted here, I think are markets you want to focus on and pay attention to because they look poised to move. How about you, Barry? What are you going to be looking at this week?
Everything. Because everything's in play. Now we have crude, we have gold, maybe not to that degree, but definitely the indices, bonds, trying to see where the low is going to come in, or if it already came in. Just kind of watching everything, especially commodities. So.
Yeah, and with commodities too, remember the bigger picture is we're in a cycle that is highlighted by shortages and limitation. And with commodities, shortages and limitation is higher prices,
right?
And really higher prices, like in big moves. So it's one of the reasons we're focused on those markets. In addition to the charts telling us, the longer term charts telling us they're under longer term accumulation now.
Right.
And we said, there's a couple, 2, 3, 4 more years to run in these markets. It's just isolating the legs and the sections where you get those fast moves, and you want to participate in those. And that's what we're trying to do here and every day when we're trading. So
that's right.
Everybody have a great week. Barry, have a great week. And let's see if we can have another good one.
Thanks, Ben. Have a great week, everybody. Good
right.
job, Ben. Good coverage.
Thanks. Bye-bye.
Bye.